Hey, this is Danielle, and welcome to the free video. So tonight I'm going to be talking about a trio of setups that have very similar chart patterns, ADSK, Adobe, and Salesforce. So looking at these tickers, I mean, first of all three of them have made a very steady climb off of the March lows. So number one, that makes them Phoenix stocks. Number two, they don't typically pull back all the way to the 34 EMA. However, they did within the last few days. And number three, they have squeezes. Number four, they have positive volume. And number five, they have earnings coming up. So here's ADSK. As you can see, it's pulling back kind of to that 34 EMA. And then boom, up it goes today when the dip buyers come in. We got into that one last week in the trading room, but I still think the setup is great. Salesforce, this one also looks really good. So same thing. I mean, you see a pullback to that 34 EMA. It's kind of like the first time that's happened, besides this time right here, in a while. And now we're kind of heading back up to the upside, and you have this earnings report here. Let's see what the date on that is, the 20th. So for Salesforce, I was looking for a butterfly to the $200 price point. Basically, I like to look for areas of high open interest. I also like to look for areas where I think that the price is going to head to, usually a combination of fib levels and some area of resistance. The level that I picked was a level just previously under the all-time high. So, I mean, you can always try to reach for the full target, but I wanted to reach for more of the easy target, which I felt would be just a little bit more likely because we normally see some volatility in August. So I wanted to reach for a little bit lower of a price target. I didn't get filled on my ADSK butterfly right before the close, but I was doing the same thing with that one there, targeting the $250 price point. And I'm going to try to get back into it tomorrow. I was hoping that I could get into it today when I didn't get filled, but it's okay. I'll try to get back into it tomorrow. And then for Adobe, this one I started off trying to get a put credit spread, and I didn't get filled on that one either, and so I need to work that order again. But basically, I was looking to sell put credit spreads in this one around the 240 price point, but also around the 230 or the 430 price point or the 440 price point. Either one are fine. It's just, below this area of support, which is where I want to sell those spreads. And then on this one, I'm targeting 460 and then 485 as well. So these are all higher price stocks. That's primarily why I'm looking to do those with butterflies and spreads. If you want to do just basic long options, typically that's going to mean looking at a Delta 70, but it's not going to be cheap. I mean, it's going to cost $2,300 a pop for a long call. And for me, I usually like to keep my trades under about $1,500 each. So that's why I like to make some butterflies. So, I mean, for example, like with this one, you could do a butterfly targeting the $450 price point. So 425, 450, 475, and that'll cost you $8 instead of the $2,300 for the long call. And because it's a butterfly, it's a range bound trade, and so as the market trades up and down, it's not going to go against you as badly as a long call does on the downward moves. So just a couple things to think about. Also, selling premium is for me always pretty good just because it's premium decay and you can do it 2 or 3 weeks away. But those are the 3 trades that I wanted to share with you today. Pretty much the same pattern in all 3 of them. That is what I'm looking for, and that is how I'm trading them. I hope you have a great rest of your day, and if you want to learn more, you can go to 5startrader.com and check out some more trades. You can also go to simplertrading.com/join and join us in the options room. All right, see you there.